Heya Cryptozens. Tonight's show. Exchanges consider proof-of-work Ethereum, Algo Stablecoin USDN Depegs, and Ethereum's cloud node problem. It's 10 p.m. Pacific time. The date is August 26th, 2022. Welcome back to the Crypto Overnighter. My name is Nikodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex. And together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. And keep in mind, nothing in this show should ever be considered financial advice. Crypto exchanges are considering what to do if a proof-of-stake version of Ethereum pops up after the merge. Now remember, the merge is where Ethereum's long-running transition from a proof-of-work to a proof-of-stake consensus mechanism is supposed to happen. Because this is a pretty big shakeup. Since its inception, Ethereum has been a proof-of-work blockchain. Year after year, people built mining rigs and converted electricity into currency. A lot of people spent a lot of time and money building and rebuilding their setups to eke out as much electrical efficiency as possible. And now, after many delays, the whole thing is about to be over. No more Ethereum mining. Well, some folks, they're not okay with that. Among them, a consortium of Chinese miners. This includes Chandler Guo. They've been planning an Ethereum hard fork, and this hard fork would retain Ethereum's proof-of-work consensus after the merge because, well, Ethereum miners have a job. So some exchanges have taken up the question of what they will do if a serious proof-of-work hard fork crops up. These exchanges have had to ask themselves if they're willing to carry a proof-of-work variant of the Ethereum blockchain. Now, BitMEX, we already know, has said yes, as has Poloniex, Wobi, and BitTrue. Some exchanges have already listed an ETHW and its affiliated financial products, things like futures. Some have also been listing exchange-specific IOUs. Now, all of this, of course, is contingent on the Ethereum W fork coming to pass. Poloniex debuted one of those IOU tokens on August 8th. Overall, the price of that has fallen over 60% since that time. Basically, it's like a lot of things in crypto. Gets a lot of attention as soon as it comes out. There's a lot of buy-in early, but now later on, not doing so well. When it debuted, the Ethereum proof-of-work IOU token, it reached a high of $140.93 per coin. At the time of writing, that token's price has fallen to $53.54. Now, Coinbase has updated their information about proof-of-work forks for Ethereum. Earlier this month in a blog post, Coinbase said that they would evaluate any potential forks of the Ethereum blockchain on a case-by-case basis. And they have mentioned that they're going to pause Ethereum and ERC20 token deposits and withdrawals during the merge. They said, quote, "Should an Ethereum proof-of-work fork arise following the merge, this asset will be reviewed with the same rigor as any other asset that is listed on our exchange." Now, we've just talked recently. Coinbase is all in on supporting the proof-of-stake version of Ethereum. Their CBETH, which is a token that represents the staked Ethereum on Coinbase, that token is trading at a discount compared to regular old Ethereum. So it's hard to say how buyers will handle a proof-of-work token if such a hard fork were to occur. That said, a series of tweets on Thursday afternoon confirmed their stance. They said, quote, "At Coinbase, our goal is to list every asset that is legal and safe to list. We will evaluate any Ethereum fork tokens following the merge on a case-by-case basis in alignment with our standard asset listing policy." And in that thread, they went on to say that all potential forked versions of Ethereum would have to go through the same listing review process as is done for any other asset on the exchange. And that's pretty close to Binance's merge plan too. They put out a statement on Thursday also. As they see it, there are two likely scenarios for the merge as far as how all this ends. Either we have one version of Ethereum and no new fork and no new token, and we're fine. However, if it splits, things get more complicated. First off, the proof of stake version will still be listed under the ETH ticker. I expect that's probably going to be universal among the exchanges. Remember, right now we're just talking about Binance. Now, further, Binance said that they would credit the accounts of Ethereum holders with units from the minority fork at a 1-to-1 ratio. How many tokens you get would be based on a chain snapshot right before the Paris upgrade. That happens later on this month, or next month. Now, withdrawals for the forked token should be available right away. However, Binance said that they don't plan on listing it for trade until the review process is complete. And similar to Coinbase, they're also suspending withdrawals and trades during the upgrades. The Bellatrix upgrade happens on the 6th, and the Paris upgrade is expected to happen on September 15th. Binance wrote, quote, "Please ensure that you leave sufficient time for your Ethereum and ERC20 tokens transfers to be fully processed prior to the above time. We will handle all technical requirements for users holding Ethereum and ERC20 tokens on Binance." At the time of writing, the global crypto market cap is $969 billion. Chairman Powell's speech in Jackson Hole really did a number. That's a 6.88% drop in 24 hours. The top 5 cryptos by market cap are Bitcoin down 6.19%, Ethereum down 10.98%, Tether, USDC, and Binance Coin down 6.51%. So people are still messing around with algorithmic stablecoins. Even after the fiery crash of Terra UST, people are still trying to make a go out of an algorithmic stablecoin. USDN is one of these coins, and frankly, it's having issues. So in the middle of a bear market greatly exacerbated by the crash of Terra's stablecoin, we have the neutrino dollar, USDN. They have lost their peg again. This is the 4th time this year. As we like to do on this show, let's take a look at the numbers. At the time of writing, USDN has a global market cap of $673 million. That's good enough to put it at number 63 compared to other coins in terms of market cap. Now, there are 685 million coins in circulation. So it's trading at 98 cents per right now at the time of writing. Earlier today, that was all the way down to 90 cents each, which if you can buy $1 for 90 cents, then that's a deal, if it's really $1. So some people might be banking on a little arbitrage action here, buying the coin at 90 cents and then anticipating that it's going to regain its peg at $1. Could be. We've been here before with Neutrino, though. Last April, amid accusations of price manipulation, USDN crashed down to 78 cents. Not a good look if you're supposed to be worth $1. Now, it recovered, but a month later, in May, USDN lost its peg again and fell to 82 cents. And again in June, same thing, crashed down to 93 cents each. Noticing the stability issues, the team put together a list of changes and voted on those changes. After the vote, the team added the new mechanics. One such change deals with changing the maximum swap amount. Also, backing ratio mechanics and improving rewards distribution. The global NFT market cap is down 4.73%. Sales volume is down 17.07% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Bored Apes, followed by CryptoPunks, Otherdeed, Azuki, and Mutant Apes. Now keep in mind, some of these collections have very volatile prices, so do your own research. Not to be too hyperbolic, but Ethereum is on shaky ground. When I say that, I'm not talking about the price of the coin. I'm not prognosticating doom for the merge. I'm talking about the actual infrastructure Ethereum sits on. Everyone thinks of Ethereum as a network, and it is, But it's not just a bunch of mining rigs processing consensus somewhere. The majority of active Ethereum nodes are on centralized web providers. For example, Google Cloud and Amazon. 52% of the Ethereum nodes, they're running on Amazon. Well, this could be a problem, and a more significant problem than running decentralized finance services on a centralized web platform. Because while that doesn't look good and gives detractors cannon fodder to ridicule Ethereum, that's not the big issue. Right now, 3 major cloud providers are hosting roughly 70% of the hosted nodes on the Ethereum mainnet. Now, one thing to be concerned about here is cost. The high cost of infrastructure does leave Ethereum vulnerable. Messari is a crypto analytics platform. They said, quote, high costs to run infrastructure make it more likely that nodes will run infrastructure with cloud computing providers like AWS, making Ethereum more exposed to central points of failure. And a different way of slicing some of that same data shows that most nodes are geographically clustered. The US, for example, has 46.4%. Now, why is this important? Government action is a problem. Any intervention on the part of the US government could seriously impact Ethereum's operations. But it's not just government influence or interference that could cause problems. Corporate interests could also be problematic. Hetzner is a popular cloud service provider. As such, it hosts roughly 10% of all the Ethereum nodes on the planet. And it's against the rules to do so. Hetzner posted on Reddit earlier this week. They said running just one node is enough to be considered a violation. The topic came up again this morning. WebCloud co-founder Maggie Love pointed out the vulnerability of having so many Ethereum nodes on these cloud services, and that's where the Hetzner official account responded. In their responding tweet, they provided a link to a Reddit post and said basically, hey, everybody read this. In that Reddit post, they make it clear, crypto is not allowed on their platform. They said, quote, using our products for any application related to mining, even remotely related, is not permitted. And Ethereum's not safe just because of the proof of stake thing. It's not just mining. They said, quote, this includes Ethereum. It includes proof of stake and proof of work and related applications. It includes trading. It is true for all of our products except colocation. And they're aware of the issue. They said that they've been having internal discussions on how to resolve it, but they're not saying why it's an issue. If Hetzner kicks Ethereum off of their platform, that only reduces the decentralization factor. Right now, Ethereum's decentralization is a question in some people's minds. And that's where we're going to call it for tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. Take care of yourselves, but take care of each other too. We'll see you tomorrow night.